Popcorn. There you go.
Pizza.
Mm-hmm. You know, if you do that, then I might.
All right, we're ready, council?
Yes, ma'am.
All right. It is 4:30 p.m. on the very last day of February, February 28th in 2023. And we are ready to begin our workshop. And we don't have any public comments, I would assume. Thank you. So we are ready for 2A, a comprehensive financial report.
Go ahead, Julie.
Good afternoon. We'll give you 9 months of work in a couple of minutes here, let you know what's going on. So just want to give you just a brief overview, just so you guys have an idea of what we're doing. We're switching back to this guy. So as you know, our audit process started back in August, before we started the current fiscal year, so it gets a little confusing overlapping. But in August through about November, we're really doing auditor review of our internal processes, doing interviews with internal staff, things like that. Just making sure that there's not any big key indicators of, any problems going on that are on the surface. They start doing data testing, so looking at accounting, pulling just various entries, purchases, those kind of things, and looking for compliance. And then we also do what's called CFA, which is for all of our grant compilation that we have to report out how much federal funding that we receive. Then as we close the year, we start looking at year-end financials, and they start looking at accuracy of recording and those kind of things, and then assets that we add or delete. And then, of course, this year we've talked about implementation of GASB 87. That was one of our big ticket items that we did this year. And then starting after we finalize all that, January, February, we're really just preparing the financial report, the annual comprehensive financial report, ACFR, so hard for all of us to say now and adjust to. So we've been reviewing that since on and off, back and forth, since about mid-January. So it's a long process to make sure that all those things wrap up the right way. So really just reviewing everything for accuracy and consistency, and asking questions, them of us and us of them, to make sure everything's good. I just want to give you a couple notes before I introduce our speaker. So your ACFR is not the budget, so it's not going to reflect exactly the same information as the budget does. So if you have specific questions about things lining up, let me know, because there's a different set of rules for the way an ACFR is presented, or your year-end financial statements, compared to the way we present a budget, which is basically cash in, cash out. So there's a lot of things that we look at from a full financial report that is not budgetary. So for example, the ACFR groups things. So what you see as the general fund in the ACFR is a grouping of funds that are general government funds. So it gets a little bit confusing, and so I would rather, just give me a call. Let's talk through it if there's something you don't understand, and we can help you with that. So really, with that, I just wanted to give you a few notes and then let you know that, so we're not asking for approval of this report. I think we talked about this in detail last year. You're just accepting that we have presented it to you. You've received an email copy. We do not have hardbound copies yet, but you will get one when it comes in, and then also it's posted on the website for the public. So with that, I'm going to introduce Kevin Kemp with Forvis, who is our audit firm. Kevin's been in government auditing for 30 years, so we take advantage of a lot of his knowledge throughout the year when we're implementing something new. So I'm going to turn it over to Kevin, and you guys can hear his presentation and ask questions, and I'm happy to interject if I need to.
Thank you. Kevin, thank you for being with us.
Thank you for having me, making sure I know how to do this. There we go. Yes, Mayor, council members, I do appreciate a few minutes of your time. I am Kevin Kemp, as Julie said. I've been doing this for nearly 30 years. Seen a lot of new standards come into play. I think my first one that I really had to deal with was probably GASB 27, and now we're up to GASB 101, so it's been a while. The thing about the Government Accounting Standards Board is I think they exist solely to make Julie and her team's life miserable, and mine as well. So anytime that y'all have to implement a new standard, it kind of trickles downhill to us. But before I get into the presentation, I really truly enjoy working with groups that are passionate about their job and love their job and want to make sure that what they're doing is right. And I can honestly say that's what you have here in your finance team. Certainly I do appreciate Julie, Trina, and the group. Very diligent in what they do, very quick to respond to our request, and they always have the answers right at their fingertips when we have questions. So I do want to point that out before we get into it. Julie mentioned Forbes. For those that have been on the committee or the council for a while, probably remembered us as BKD last year. We did go through a merger effective June 1, where two like-sized firms came together. And so we came up with a new name that is actually a combination of Forward and Vision. So I've had lots of people that I've dealt with for many years, and some of the smart alecks said that sounds like a flea and tick killer or something like that. But it's I guess it just proves that audit firms can have a sense of humor. But that's what it stands for. For you all, no impact. Name change. We do have more resources now to bring to our clients, a broader base. So we're happy to do that, but from a client service standpoint, I don't think y'all saw any difference from what you have in the past. Quickly, these are the things that we're going to cover. I promise to be relatively brief, but as Julie said, if you got questions, happy to answer them at any point in time. So the things that you are concerned about. So we come in and we do our audit in accordance with generally accepted auditing standards. And we also this year, because you did receive more than $750,000 of federal funds, actually expended more than $750,000 in funds, we also did what we call a single audit. So we have to comply with the requirements of the OMB. And so as part of both audits, we come in and we look at your internal controls over financial reporting, cash receipts, cash disbursements, payroll. Then we look at your controls over compliance. Are you spending it for allowable costs? Are you reporting back to the government when you need to be? In your case, you did procure some things this year, so are you following the federal procurement policies? And your policies are actually more rigid than the federal policies, so we check to make sure that you're following those policies, your internal policies. Happy to report, no material weaknesses, no significant deficiencies, no findings in writing. Your opinions were all clean, unmodified opinions, so it's always good to know. Obviously, if there were problems, Julie and EA would have known a long time ago, and that would have come to you as well. But so clean and modified opinions, happy to do that. All of the city's most significant accounting policies, when you get like 160-page document, they're going to be in footnote 1. That's going to tell you, a little bit how your accounting policies operate. And Julie mentioned a while ago that, this set of financials is a little bit different than your budget. Well, you actually have two sets of financial statements. You have one on the full accrual and one on the modified accrual, which is very confusing. It just depends on which version you like. I'm going to focus a little bit later on the full accrual, but also kind of touch on the funds as well. Julie mentioned implementation of GASB 87. That is the lease standard. Y'all did a really good job of gathering all the leases, analyzing them, and it made our job a whole lot easier. We do think that there was no significant alternative accounting treatments that we noticed. Y'all followed generally accepted accounting principles right down the middle of the road, which we like. All financial statements have estimates and judgments. And again, some of the significant ones are your defined benefit plan assumptions. Most of those are handled by TMRS and their actuary, Gabriel Roder Smith. Your OPEB also has significant assumptions. So what we're looking at that is for reasonableness, consistency. If we notice anything unusual, which we do not, TMRS uses a long-term rate of return of 6.75%. We think that's reasonable. We see from various pension plans that we audit, some go as high as 7.15 to 7.5, and then we do see some that are a little bit lower. That seems to be kind of in a sweet spot. Definitely hasn't happened over the past 18 months, but I think they're looking at it over like a 10-year average is how they came up with the 6.75. I say that to say that we do think that your estimates and judgments are proper in all material respects. They're not going to be perfect, and they can change. So but that's what audited financial statements are all about. So we do propose adjustments throughout the audit. Most of those have been outsourced to us. We know coming in that y'all would like us to help with the net pension asset and related deferred inflows and outflows. Same with the OPEB entries, lease entries. Y'all have all the information. It's just y'all keep y'all's records, again, kind of on a budgetary basis. We kind of help convert it to a GAAP basis. But it's easy said than done. And, y'all make that process a lot easier for us. We didn't make any adjustments that y'all did not actually make in your own records, so no past adjustments to deal with. And I think, again, we're very comfortable with the accounting principles that you all follow. So, highlights of the financial statements. I told you I would talk more about the government-wide kind of full accrual, what most for-profits and not-for-profits report on. This is your kind of your government-wide revenues. So it was $55 million this year. That includes your water utility as well, and you kind of can see a breakdown of your sources of revenue. I have to put my glasses on so I can see better, but basically taxes, when you bring in property sales and occupancy tax, right at 71% of the total, and I think that's consistent with what you are accustomed to. Same way with expenses, $48.7 million. The largest part of that is public safety, and then your water and sewer operations are broken out as well. If you take the difference in those two, you had a really good year from a full accrual standpoint, about a $6.3 million change in net position or net income. Several factors in that. I mean, you're fully recovering from the pandemic, so you've seen an increase in property valuations, obviously. Sales tax has continued to improve, kind of helped by inflation as well. You do have some grant dollars that were recorded this year, especially from the Texas Water Development Board when you're replacing your reuse line that was damaged in 2020. So that's factored in, but again, a very strong year from a financial standpoint. I think auditors cannot help but talk about the net pension liability. That is a big number. Good news is it has flipped to a net pension asset as of 9/30/22. But there's always a but with this. The TMRS's audit and actuarial study is done at December 31st year in, because they have to get that done, get the actuarial study done, so all of the cities that participate can have the information for their 9/30 financial statements. So if you remember, 12/31/21 was probably one of the high level marks for investments in the market. That's obviously went down considerably the past 15 months. 14 months, so just this next valuation, we anticipate that will flip back to a liability, but you're still very well funded. You can see for the last 3 years, 93.8, 94.6, and then 100.8. Most watchdogs would say any plan that is 80% funded is a well-funded plan. So did want to point that out. And then did want to talk about the general fund. You can see your unassigned fund balance has increased from 9.28 to 11.66 over the past 3 years. Total fund balance for the general fund did increase $516,000 this past year. I think y'all had actually budgeted about $1.5 million spend down. So again, very, very strong financial performance. And one thing that we like to always look at is your unassigned fund balance as a percentage of your general fund expenditures. That excludes your transfers out to other departments, but that is at 36.1%. Again, the Government Finance Officers Association recommends 2 months of fund balance at a minimum, which would be about 16%, so you are well ahead of that. And speaking of the Government Finance Officers Association, y'all did receive for your 2021 ACFR, the Certificate of Achievement for Excellence in Financial Reporting. We believe that the 2022 will also receive the award. They had a few minor nitpicky comments on the 21 that we think Julie and her team have addressed. And y'all have gotten that award for 37 consecutive years, so that's something to be very proud of. And then the last things, again, I kind of talked about Government Auditing Standards Boards has continued to come up with new standards for you all to implement. We've actually started talking about GASB 94, the public-private and public-public partnerships. That's just kind of going to go through all your agreements and seeing if there's anything out there that you haven't previously addressed from a standpoint. Through our discussion, we didn't really come up with any definitive ones. Some of the things that we've seen at other entities would be like golf courses being managed by a third party, but you retain the ownership of the golf course. Or we see some cities that go into business with commercial entities to do like housing developments or like apartment complexes for the needy or something like that. And that's something else that you would have to look into if applicable. The one that's probably going to be the most fun is GASB has said any of your subscription-based information technology arrangements, your software that it's out in the cloud that you've probably been expensing all the time, you'll still have to expense it, but you'll also have to identify it and recognize it as a right-to-use asset, especially on these long-term contracts. Like if you got something with Microsoft for like a 5-year period, you would have to book a liability associated with that, but you would also put the asset on your books. So it's kind of like a bump up of your balance sheet per se. And you will not have IT-related expenses. They will be replaced with amortization of that subscription. So, and then the other two are probably are a ways out. Compensated absences, that's just trying to get everybody on the same playing field as it relates to your compensated absences and how you report that on your financial statements. That's not going to be effective until 2025.
Compensated, what? Is that for employees?
Like accrued payroll or accrued salary or accrued vacation, anything like that, that might be paid out at retirement or when somebody leaves. Finally, this is just something that we mentioned to everybody. Like the SEC is beginning to get some information and ultimately are going to require, the SEC entities to report on their environmental, social, and governance processes in place. We just feel like that's probably going to come to everybody at some point. So this is more of a top of mind, friendly reminder that just be mindful of it, and because somewhere in the near future you may have to be reporting on it. So, and last but not least, I didn't include this, but we continue to mention cyber everywhere we go. Again, we didn't see anything at the city that says, hey, you're vulnerable. It's just that we've just seen an uptick in issues in our client base, and it's just a friendly reminder to be cognizant of that and ever mindful of it. So with that, happy to answer any questions.
You've given us a lot of information.
I know. And I'm from Arkansas, and I talk really slow, but I feel like I've said quite a bit.
All right, council, any questions, comments?
I think I understood Julie to say that we're going to get a copy of this eventually. And
Hard copy, yes, sir.
I received mine maybe an hour ago. Tried to look at it, but I don't think I understood half of it.
And it is, the only council action that is asked for is just acceptance of receipt of the document. We don't ask that you approve the document. The accountants approve the document and send it on, but it is simply just acceptance of receipt of it.
Do you need a motion to accept?
I believe that is the motion, correct?
I can go back to that.
Anyone else have anything before we proceed with the motion?
I wish I had more, but we didn't have adequate time to review it, but if there's anything, I'll be sure to reach out.
Thank you.
Martin, can you reload me? Thank you. So again, it's just asking for acceptance of it at this point. There's a lot of information, and we were reviewing it until last night. We just want to put the final stuff together this morning, so it seems like it's the same way every year, given the timeframes that we have to produce information of this kind of magnitude. But that's why we're here, so happy to discuss it, you know, at any time, so.
Do we have a timeline on when we need to accept it and approve it by law?
There is no approval.
Won't approve it.
I mean, not, I'm sorry, not
March
approve it, just
31st.
accept it.
March 31st.
Okay.
Mhm.
In the future, if we get this kind of document, I would just ask that in order to give us adequate time to review it, since this is the time, I think we have the auditor here and we can ask those questions. If we don't have it ahead of time, like with the agenda packet, if we can, respectfully, my request is to move it and postpone it to a future agenda, like we could have done it sometime in March. That way, you know, I don't feel prepared just sitting here right now.
And I understand that, and keep in mind, these are city documents, so really, you know, we would be your first line of questioning as far as how the financials line out. So we have a two-part kind of audit situation. There's the audit piece, which is primarily what Kevin is reporting on today, not on the large scope of getting down into the details on our financial statement. So some cities prepare their own ACFR. We choose to have assistance to make sure that we've covered all of GASB rules and GFOA rules, just so when we bring it to you, it's been reviewed by a third party. So we're able to answer any of those questions as well.
So we're accepting it and it was sent to us.
Mhm.
Sent to us, we're accepting it.
Yes, you're
But
just
it was-
accepting that we have provided this
That's
to
what
you.
we're doing today.
That's it.
So
Yes,
I'll
ma'am.
make a motion to accept the audited annual comprehensive financial report for fiscal year ended September 30th, 2022.
We have a second? All right, everyone in favor, if you'll raise your right hand, please. And it is unanimously accepted. All right. Thank you, staff. Good job. And
Thank you very
Kevin,
much.
thank you for being here
Did a
with
good
us.
job. What a great
Yes. Yes,
determination. Thanks.
Very good.
Done well,
Be proud.
done well. And I think you've got somebody in your group that maybe has a birthday today that
Stand up.
goes along.
Jacob has a birthday.
Happy birthday.
Happy birthday,
Happy
Jacob.
birthday of the month. You missed leap year by 1 day.
Thank you for your work. So. All right. Again, thank you, guys. We appreciate all of the hard work and all the time that's gone into that. All right, at this time, we are ready to recess and convene in executive session.
Mayor, I'll move to go into executive session.
Thank you.
Ready for a motion?
Yes,
Under 3A, and we're just seeking legal advice, right? So just that one, okay, under 551.071.
yes. Do we have a second? Second. We have a second. All in favor? If we need it, we don't really need that. Thank you, though. And at 4:53, we will recess into executive session upstairs.
Good job, Finance Department.
Yeah.